Good afternoon and welcome to Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at MarketSite is Victor Jones. He's the Director of Trading over at TD Ameritrade. Thank you as always for joining us in New York.
Here, Jill.
All right, so Black Friday broke some sales records, but also some mobile trading records. Tell us about that.
Absolutely. Black Friday continues to be a great or a perfect example why market access anywhere, anytime is so important in today's markets. I'll give you an example. Black Friday over the last 5 years has been the record day for mobile trading every year since 2012. And it kind of makes sense if you actually think about what we saw on Friday. The Nasdaq, the S&P 500, the Russell 2000, they all notched all-time highs, and the Dow Jones was only 0.5% off of a fresh high itself. So people wanted to be participating in the marketplace. They wanted to be participating in upside rallies, and of course they want to be managing their portfolio. So mobile continues to be a trend, especially on these holidays. And let's talk about what they were actually trading.
This I find super, super interesting because tech has really been the darling sector of 2017. But you cannot get enough of blockchain and crypto, right? I mean, I saw the trading in. I'm gonna front run you a little bit here, but like Emera and Riot, it's unbelievable. So those are the two blockchain and crypto names that they're trading. But let's what are your thoughts on that?
Yeah. So 2 out of the top 5 names, you're absolutely right, had to do with cryptocurrency and blockchain. The other one was Amazon. So as you just mentioned, record sales. We did see record sales on Black Friday. We did over $5 billion in online sales. That's a 17% increase year over year. Well, who's best positioned to potentially take advantage of that? Amazon, with over 40% of the market share for e-commerce in the United States. So we saw some participation in Amazon. We also saw basically a Chinese digital payments play as well, hit a 52-week low, a low since IPOing in October. But let's talk about blockchain. I think this is especially fascinating. It's on the top of investors' minds here. They're looking for potential ways to get exposure through centrally cleared exchanges. And I think that's why we saw the participation that we did. But unfortunately, I think there are multiple aspects to blockchain and cryptocurrencies. People only tend to talk about one, Jill. If I could expand on what those 4 things are. So it's trading. Okay, so first and foremost, as a tradable instrument, you can't deny that there's demand for cryptocurrencies, right? But there are 3 other elements here that are important to include in the conversation. Unfortunately, they get commingled. It's technology. So we talk about blockchain. There's the prevailing sentiment, of course, that blockchain is a transformative technology, has the ability to transform not only financial services, but can potentially transform many other industries as well. I think the blockchain technology obviously is here to stay. That is something that's here to stay. Now let's talk financing. So those are your things like initial coin offerings, ICOs. That is where we're in a bit of a regulatory gray area, both here and abroad. You have countries like China. That's exactly what they banned, those initial coin offerings with these companies trying to raise capital through this kind of emerging trend versus going through traditional debt and equity markets. And the third one, really quickly here, is you've got digital payments. So that's the ability to buy goods and services with this new crypto or digital currency. So those 3 areas, you can debate all or any which one of them. What you can't debate is that there's demand for these underlying cryptocurrencies and exposure to that world right now, especially as we approach 10,000 in Bitcoin.
Right. Well, I think it's interesting because there is no volatility in U.S. equity markets. This is certainly an asset class, is really what it is right now, that does have that vol in there that traders are really craving. I also found it interesting that GE was one of the top 5 as well. That's kind of a little bit random in like a tech-driven market.
A little bit, right? But I actually think if you look at our IMX, which is something, a monthly reading, we actually saw last month as GE started to have some difficulties and investors started to look at that as an interesting value play ahead of their investor conference. Then you saw the investor conference, the stock fell a little bit more. So we have seen some kind of investing here, looking for value in GE. So it doesn't necessarily surprise me that a day or 2 after we saw a big investor come in and buy $54 million worth of the stock, that we also had investors come in and look at a potential opportunity to buy off of that. So I think that's one of the reasons that we saw a little bit of buying there on that Friday.
All right. Well, thank you very much for joining us at MarketSite. As always, traders, thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.